Hi traders and welcome to the technical analysis market wrap on Friday the 16th of July. So we've seen some pretty good action this week. A couple of the majors have been playing the game and are starting to approach the levels that we've been talking about for a little bit, and the dollar index looks like it wants to bust through to a new high. So we'll jump straight into the charts and see if we can identify some opportunities for today or early into next week. So we'll jump into the Aussie USD, our favorite starting point. And look, it's really wanting to get down to a new low, isn't it? Like we can see here, this is the level that we've set for it. We know that that 73 sort of 50 area is very, very strong. It's really putting pressure on this level now. You can see here that this is probably the third or fourth time this week that it's actually pushed this level and tried to get through it. We had that big rejection candle last week off the 20 moving average, which is a really good sign when we're getting lower highs and lower lows anyway. And you know, a low, or what we want to see is actually a daily close below this level. If we get that, yeah, we can be pretty confident that the 73.50 is the next logical target here. I like this trade because the stop loss is fairly tight as well, and we know that we've got, you know, all of the backing of the big moving averages in our favor, and we've got the lightning bolts also coming in our favor. So a pretty good trade. We need to keep an eye on a break of the daily here. We can go to the smaller time frames, and we can see that although they're going a little bit sideways, which pretty much resonates with what's happening on the daily, you can see that we've got patterns forming everywhere, and all the key moving averages are actually behind where price is. So there's a lot going for it for the short side. It needs a lot of work to go long, that's for sure. So, you know, in order for this to be going long from here, it needs to basically reverse all of those smaller trends and close high on a daily above the 20 moving average. And yeah, it seems to be a long way away from doing that. It's not that it can't do it, but yeah, in reality, the short is the easier trade, and we're always looking for the easier trade here. So the path of least resistance is to get a daily close below this level, and if we do that, our logical target's going to be the 73.50 or just a little bit under. So pretty good trading on the Aussie. We've had some reasonable scalps, but you've got to go down to the very small time frames to get it. You can see here on a 15-minute chart, we had all of the resistance at the top here. Once it started to fall and made the series of lightning bolts, as we always like to look for, we had the test of the 20 moving average, and they're the shorting opportunities that we're always looking for in the smaller time frame. So pretty good trading, and hopefully we'll get that break to the downside so we can actually trade it to its full potential. All right, we'll move over to the US dollar CAD now. This one is basically doing the exact opposite. This is really pretty much fast approaching the level that we set for it. We know that the 126.20 is basically a brick wall in front of this one. We know we've got all of this support through here and resistance through here. Very strong level this. It's been doing everything we wanted it to do. It's making the higher highs and higher lows on a daily. The moving averages have crossed now, and MACD is certainly in our favor. This is a really good trade, but we do have, you know, like I said, we've got that big pin bar that we could have traded off this level here as well if you're looking for an entry to get in. The good thing about these is once you know that you've got a bias in a direction, you can go to the smaller time frames, and the trades are everywhere. Like you can go to the 4 hour, you can see the pullbacks. You can go to the 1 hour, you can see the pullbacks. There's always opportunities to get in once it's starting to trend. But it is fast approaching a very critical zone. It's got the roll reversal, which we know is very serious, and we've also got the 200 moving average on a daily. So 200 on a daily we know is a very serious moving average. It hasn't touched it in, well, you can see how long it hasn't touched it in. We can zoom it right out, and you can see here that we haven't had that basically happen since it was hovering around 135. So, you know, to give you a bit of an example as to how long it's taken, this is a very critical zone though. So I can't imagine it's going to bust through here without at least testing it and testing it well. I wouldn't be taking the initial break at this level here. I would be looking for a break of this zone and then let it come back and retest it from the top to make it a roll reversal on the other side. If we get that, it makes it a far more lucrative trade, okay? What we want to be seeing is definitely a retrace. If you take the first break, you're more than likely going to get faked out. It would be very unusual for this to go through this important level without coming back and pulling back and testing it from above. So I would be erring on the side of caution there. Let it do its thing, let it come back, and then we look for longs from that point onwards. But be very careful around this zone, because if you have been long, this is where you should be taking profit anyway. So we should be just about out of it now. All right, we'll move on over to the US dollar yen. This one is not showing the same strength as the US dollar CAD, of course, but in saying that, it has found itself at a very strong level of support now. I mean, it was pretty much here last week, so we shouldn't have any surprises here. And it did the job. It went back up and tested the 20 moving average and that little mini resistance at around that 110.60 area. So it did that. And if you scalp that, you would have done well. We certainly got what we expected out of that move. So it finds itself at the same place pretty much as it was last week. You know, the 109.80 is a very strong level for it. You can see it was resistance right through here and through here. And if we go right back, you're going to see that it's actually a really important zone for basically the last 5 years. So realistically, we know it's a very strong zone. We've got to treat it with the respect that it deserves. I am not keen on doing a long or short on this. I'm certainly not keen on the short because it's got a lot of congestion underneath it. And for the long side, look, we need to see a change of trend on one of these key time frames. I wouldn't be taking a small one either. I'd be looking for probably a 4-hour change of trend on this one. If we get a 4-hour lightning bolt with a series of higher highs and higher lows on the 4-hour, it'll be above the moving averages. Then the all-important price above moving average on a 4-hour is very important for a change of trend. So I'd be looking for that. And if we get that, then all of a sudden it's looking like a long opportunity back into the 111.50s. But it needs to do that. So for me, this is probably one of those ones that I'd be watching with a little bit of interest at the moment, and let the price action play the game. Let it do what it needs to do. And once it's done that, we can jump on board for a long opportunity. Now, if it does happen to break down and goes lower, at that point, we'd be looking for... I'm not really going to be interested in actually shorting this until it breaks down past the 109.30. So you can see it's still got quite a bit of work to do. It needs to make a series of lower highs and lower lows to get down below this level. Then we know it's strong support. If it breaks that support, then I'd be looking at maybe taking it short down to the 108.50. So it needs to break this level for me. I wouldn't be jumping on the initial short. It needs to do a bit more work because it's got so much problems in this level here. It needs to get past all of those problems. Once it does that, then we can start looking for shorting opportunities down to 108.50. So pretty straightforward on that one, but there's probably quite a bit of just basically watching it and letting price action play out. All right, so we'll move on over to the dollar index now. We'll take it down to a daily chart. You can see here, we've had a pretty strong day. It's been a pretty reasonable US session for the dollar index. It was quite a bit lower at the start of New York last night. It looks a little bit tired because it's, even though it is at a very strong point of resistance, you can see right through, I'll zoom it out a little bit. You can see that we've got pretty strong resistance right through here, right through all that support through there. We've got resistance there, so that makes it a very strong roll reversal zone. I think that's what's found it out a little bit, and it's finding some consolidation at this zone. But in saying that, it's not exactly selling off either. So we've got the 20 moving average, basically there to prop it up if we need to. So yeah, for me, it's probably just letting this one do its thing. If it breaks higher and gets a daily close above these levels here, it opens itself up back up to a 93.50 move, which wouldn't be a bad move, especially for the short on the euro. But for me, it's got to do its thing. I'm not really interested in the short unless it does a lower high, lower low. When you see strength like this and you see it on a daily, you don't really want to be involved in trying to break that trend. You don't want to be the first person in that war. You want to let that play out a little bit. So if we get a daily change of trend, so we get a series of lower highs and lower lows, then that would mean that this trend is well and truly broken and it's on its way down again, and then we can start looking for shorts, maybe down to the 91.50 or 91 again. But until it does that, you're really playing with fire, trying to short something that's actually trending up. Now, although it has paused a little bit here, it's starting to show the strength again. So I would be looking at potential breaks of this level. That's my preferred trade. The short's got a long way to go because it needs to do a lower high, lower low, and that could take a week or two really to get that price action suitable for us. So the ideal trade would be for it to close higher. If we get a daily close above there, it opens itself up to that 93.50. But of course, it's the euro that we're going to be looking at for that particular trade anyway. And of course, you're going to see the same thing. So we've got our lower highs and lower lows. We know we're in a downtrend. We've tested the 20 moving average, and our target here is the 117 effectively. So we're looking for a little bit more of a short. We've got another 100 pips down before it actually gets there. If you're not already in it, if you're already in it, that's fine, because I mean, you're looking pretty good anyway. You should have been in it around this level here. But if it does break down past this low here, we need to get a low past the 117.80 area. A daily close below the 117.80, and it really opens itself up to getting down to that 117. So a reasonable 80 pip scalp there if you can time it right and get the daily close. But I wouldn't be doing it until I got that close, because that is relying on the same confirmation that the dollar index is relying on the way up. So until that actually happens, trade it with caution, but it's certainly a good trade, and it's been a good one really right through. hopefully you were able to take advantage of that short that we were talking about, and now we look for the next short at the 117.80. To go long, of course, we need to do the complete reverse, and we need to see a series of higher highs and higher lows. I wouldn't accept anything short of a daily for that to happen, because this is still looking fairly weak for mine. So it would need to be a daily change of trend to start to take this long. And if it does that, then it opens itself up again to the 120. But the short is definitely the preferred trade here. All right, the last one we're going to have a look at today is gold. Now, gold is doing its darndest to actually break past this 200 and trend up. I really like what it's been doing. Basically, we were around this level here last week, and we thought, well, it's going to find resistance here, but if it breaks through it, it's going to be a really, really positive sign, especially looking for an 1850 target. It's done that. This hammer candle was our giveaway. Once we saw that at the 20 moving average, that was a signal to get in, and hopefully you were able to take advantage of that, because it was fairly obvious when it was happening. So hopefully that was a trade for you. Look, moving averages are doing the right things when we are not far off getting across. We've got MACD doing the exact thing that we want. It's about to cross above the zero, so we know that they're converging on each other in the right way. Now, it's at the 200 moving average, sorry, and it's an important juncture for it. The 18 sort of 28 to 30 level has been fairly important for this particular gold USD pair. But look, it's, you know, it really, if it does close above here, I'd like to see a daily close above this 200, like probably a little bit higher than it is now. It's there technically at the moment. I wouldn't mind it seeing a little bit higher, but a close here is quite significant because it does open it up for another $20 move or $25 move up to the 1853. There's not a lot in front of it after this level, but yeah, that's definitely a target, and you need to go out a little bit to understand why that's a target. But again, yeah, you can see all this support and resistance right through here. So that's going to be the logical place it's going to go. I mean, it could blast through it. Gold does that. I mean, there's no question about that. But yeah, if you're scalping, which you probably are on gold, I don't think most people wouldn't be taking long positions on it because it's been a pretty good scalp. That is the area you'd be targeting. So yeah, look for a break above the 200 moving average, and if it does that, you can start targeting your trades to the 1850. Now, on the short side, if it does break down and the 200 does hold it, I wouldn't be interested in taking this short unless it broke this zone here. This is a week and a half's worth of action, and it's going to prove to be a very strong level of support now. So even if it does start to short off here, it's only probably going to get around to that sort of 1805 to 1810 area before it finds very strong support. So just be very mindful that that is there. And if you are going to short it on the very small time frames from this level here, and you see a little mini change of trend, this is a target you'd be going for. You'd be very brave to be looking for a short trade past here in the first go. So if you are targeting shorts on the smaller time frames, put your horizontal line here around the support around that sort of 1805 level, and that's what you're going to be targeting on gold. So I hope everyone's had a great week's trading. I think we've had some pretty good opportunities, and we've got the majors at very key junctures again. So, we see the opportunities, and we've got the support and resistance zones drawn up. So when you know where you're aiming for, it makes it a lot easier to trade. So hopefully you've been able to identify some of those and take advantage of some of these moves. Thanks everyone, and have a great weekend.